Hello everyone, we'll see the next problem under the process costing. See the page number 40 and question number 45. Page number 40 and question number 45. A product passes through three distinct processes to completion during the quarter ending 31st March 2009. The cost and production were as under: other materials, direct labor, direct expenses, normal loss in output, normal loss is percentage, sale of scrap, okay, production in units. Total production overhead rupees 60,000 and 1000 units at rupees 50 per unit were introduced to process A. First, under the process A, production overhead is allocated to each process on the basis of 50% of direct labor. Production overhead is allocated to the each process here on the basis of what? 50% of the direct labor. Prepare process accounts, abnormal loss account and abnormal gain account. Okay, we'll see. It's very easy problem. See, first we have to prepare the process A account. Under that, material introduced under first how much? How much material introduced? 1000 units of rupees 50 per unit. Okay, then see the column, the material 20,000, direct labor 30,000, direct expenses 5,000 and the production overhead total 60,000. Under that, see total 60,000 into production overhead is allocated to each process on the basis of 50% of direct labor. Okay, 50% of direct labor. Direct labor is how much? 30,000. So under the process a production expense of 30,000 into 50% means how much? 15,000. Okay, 15,000 here. Production expense, it's nothing but, see, production overhead is total 60,000 allowed to each process on the basis of 50% of direct labor. Direct labor under the process A is how much? 30,000. 50% means 15%. For the process B, 20,000 means 40,000 into 50%. Here 25,000 means 50,000 into 50%. Okay, over. Next we'll see the abnormal loss or gain. First you can write the normal loss. Normal is how much? 10%. 10% means 1000 into 10% means 100 and the scrap sold for rupees 30 is given in the problem, so 3000. Now we need to find out whether there is a abnormal loss or abnormal gain. Just write normal production input minus normal loss 1000 100 900 and the normal expenses of debit side 1,20,000 minus salvage value just calculated 3000 and next abnormal loss or gain 920 minus 900 20 units. This is the abnormal gain and the transfer price is 130 per unit. Okay, so abnormal gain 20, 130 transfer price means 2600. Okay, next just transfer to the process B remaining 920 and 1,19,600 and 130. Okay, next process B same, there is no any other changes, same process A transferred from process A. Then materials given in the problem 30,000, direct labor material 3,000 and the direct labor 40,000 and the production overhead 50% of direct labor under the process B is 40,000, so 50% means 20,000. Then normal loss how much? Under this 5% on normal loss, 5% on input, so input is 920 into 5%. Okay, next sold for how much? Rupees 50 is given in the problem, so 46 into 50 2300. Next abnormal loss, just calculate the abnormal loss in the this table. It's easy. First calculate the normal production, then cost of production, then abnormal. You getting the minus 40 units. Minus 40 units is abnormal loss. We have to write abnormal loss 4 units, sorry, minus 4 units, 4, and the per unit is how much? You got the transfer price of 240.6, so 962.4. So next output of the process B transferred to the process C. Under this also process B, direct materials, direct labor, direct expenses, process B direct materials, direct labor and direct expenses, okay, direct expenses, and then you write direct expense. After that, the production overhead, same 50% of the direct labor 50,000 here, 25,000, okay. Then write the find out the abnormal loss or gain. Normal loss, right, normal loss is 10%, 10% 870 into 10% 87, then finished transfer to the finished goods, okay. This is about the process A, process B, and process C. Now is the abnormal loss account. It's very easy to find out the abnormal loss, okay. Abnormal loss, how to calculate the two process, where is the abnormal loss? Only under the process B, right? Process B account, how much? 4 units 962, and the whole abnormal loss is transferred to the costing profit and loss account. Next, abnormal gain account. Abnormal gain, you just transfer abnormal gain from the process A and process B. Process A 20 and here 17 units, 20 and 17 units, 2500, and here abnormal 20 2000, this is 2600, okay. You just make it as 2000, this is a spelling mistake, 2600, okay. Next, okay, then see, now abnormal gain is entered. Process A, in process A abnormal gain is there, and in process C abnormal gain is there. Now total units, how much abnormal? 20 plus 17, how much? 37. Normal loss, so okay, 37 units. You should adjust the abnormal gain to the normal loss, okay. Abnormal gain to the normal loss under the C. How much is the normal loss is there? See, under the process, first see the process C. Normal loss is how much? 100 units are there. Here only the 37 units. You can sum of out of 100 units, you can adjust only the 37 units. You can adjust 37 into per unit is how much? Normal loss under the process A 30. 37 into 30, how much? 1000. You can adjust only the 37 units under the A, and remaining you have to write here. Remaining transfer to the costing profit and loss account. This is the abnormal gain account, okay. Abnormal gain account. Next, just see the next problem under the page number 40 and question number 46. See, a product passes through three processes A, B, and C. The normal wastage of each process is 3%, 5%, and 8% respectively. The wastage of each process is sold for, it is a wastage or scrap 0.25, 0.50, and 1.00, means rupees 1 per unit respectively. 10,000 units were issued to process A in the beginning of the month at rupees 1 per unit. The other expenses were as follows: sundry materials, labor, direct expenses given in the problem. The actual was A 9,500 units, B 9,100 units, and C 8,100 units. There was no stock at the beginning or at the end. Prepare process account, abnormal loss account, and abnormal gain account. There is no any changes comparing to the last problem and previous problems, okay. You can do it as homework. Question number 46, page number 40, okay. You can do it as homework. It's very easy. First prepare the process A, process B, process C, then abnormal abnormal loss and abnormal gain account, okay. You do it as homework. Next, we'll see page number 30 and question number 19. Page number 30 and question number 19. See, section C, under the section C, first problem. A particular brand of phenyl passed through three processes during the week ended 15th January 2000. 600 gross bottles were produced. The cost book shows the following information: materials, labor, direct expenses is given in the problem. Cost of bottles in the process B. Under the process B only, cost of bottle 2030. The indirect expenses for the period were rupees 1600. The byproducts were sold for rupees 240 under process second, and the residuals is sold for rupees 125.50 process third. Prepare the accounts in respect of each process. Show the cost of production of finished product per gross of bottles. indirect expenses are to be allocated on the basis of labor. See, indirect expenses is 1600, it's allocated on the basis of the labor. Labor means 3000 is to 2500 is to 2500, means 6 is to 5 is to 5, right? 6 is to 5 is to 5. It's also very easy. We'll see the problem. See, first we have to prepare the process A account. Under that, materials, right? 4000. The units is how much? See, the first 600 gas bottles is the units. So here material is 4000, units 600, and the labor 3000, direct expenses 600, and indirect expenses total 1600. Total 600 on the basis of the labor means 6 is to 5 is to 5 is the 600, and the other nothing, right? You just transfer to the process 2 account. There is no normal loss, there is no abnormal loss. Okay, next process 2 account. Process 2, under that process A and the materials and labor, direct expenses, and one more cost of bottles is there, right? Under the process 2 you have to write that also, and 2 direct expenses. Okay, 1600 into 5 divided by 16. Then is there any sale under the process 2? See, the byproducts were sold for rupees 240 under the process 2. Byproducts sold. If there is a sold, you have to write under the credit side. So by bank sales, how much? 240 divided by 600. Not 600, right? 600 means how much? 0.40. Then next transfer to the process 3 account. Next process 3 account, same process 2 account. Process 2 account transferred from process 2. Materials directly given in the problem, labor is given in the problem, direct expense is given in the problem, indirect expense is also given in the problem. 1605 by 16, and by bank account. By under this also see, and there is, if there is any sold, CG is sold for rupees 125.50. 120.50 divided by output is 600. Okay, so remaining is transferred to the finished goods account. This is about this problem. Under this nothing is new, only the sale of the byproducts and sale of the residual product. Residual. If there is a sale means you have to write under the credit side. Okay, credit side you have to write under the particular process. Here byproducts under the process 2 is given in the problem, so you have to write under the process 2, and residuals under the process 3 you have to write under the process 3 credit side. Okay, this is about this problem. Okay, we'll see some other problems under the next class.